Should you follow Warren Buffett? Should you have a lot of cash in your portfolio just in case we will have a crash in the future? Maybe the best investor in the world is seeing some things that we can't see, retail investors. So I want to answer to this comment that I have received a couple of days ago. Thoughts on Buffett having 50% of Berkshire's portfolio in cash and cash equivalents. Like he said, he's okay waiting for 5 years for big opportunities, but he does not think he will have to wait 50 years. What he's saying is Warren Buffett is cautious. He wants to buy when things are at a discount. So maybe Warren Buffett is waiting for a crash to happen so he can buy and use this cash to find opportunities. That cash position is the elephant in the room, which is why I stay 40% in cash from talented videographer. Thank you for your comment. I will answer this video by showing you the theory and then the real world, okay? In case this is your first video from this channel, my name is Christophe Noor, welcome. I'm French, I've been investing in the stock market for almost a decade now, and I have achieved a performance of roughly 25% per year. And I've seen a couple of comments like this, that Warren Buffett is raising cash. You have 30% of the portfolio, 40% of the portfolio in cash and cash equivalents. The numbers may differ depending on where you find this information, because you have to account for the float, because Berkshire Hathaway is an insurance company. Anyway, the point is valid from this subscriber. The point is valid. Warren Buffett has been selling stocks for a while now, for many quarters in a row, and he is raising cash. Okay, a few points I want to talk about in this video. First of all, the US market right now is overvalued, a little bit expensive, so you don't have many opportunities. Let's say I draw a big circle here. This is your investable universe, okay? These are all the potential stocks we can buy, you and I, retail investors. More than 50,000 stocks. How many stocks do you think Warren Buffett can invest in because of the size? The portfolio of Berkshire Hathaway is roughly $500 billion. If they want to build a 10% position, that would mean a position of $50 billion. Okay, pretty simple to understand. You have a mandatory threshold. I mean, you can't go above a 10% ownership. If you go above the threshold of 10% ownership, Berkshire Hathaway will have to issue a Form 4 report publicly every time they buy, every time they sell, every time they trim, every time they add, which is quite painful, and they don't want this. They want to be in the shadows. It has been working wonderfully for decades. So they don't want to go above this threshold of 10% because you are more flexible. You are more nimble if you stay below these 10%, okay? 10% ownership. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. To have a position of, I don't know, 10% of your portfolio, the position should be $50 billion. That means the market cap of the company should be $500 billion. So let me show you what it really means. This is your universe. You have thousands and thousands of companies, and this is the investable universe of Warren Buffett. Only companies with a gigantic market cap. And I can show you what I mean because I can use this beautiful screener from Fiscal AI. By the way, you have a discount code in my description, an affiliate link. It will get 15% cheaper to use this wonderful website. If the only thing I put on my screener is I only want to be invested in companies with a market cap of $500 billion, I only have 21 results worldwide. It's not only in the US, guys, worldwide. Okay, so the investable universe to find a 10% position for their portfolio is 21 position. You don't have the same problem as Warren Buffett. So to answer some of these comments, don't compare yourself to Warren Buffett. You don't have their constraints. You don't have the size that they have. Now let's say instead of having a 10% position, you want a 5% position for their portfolio. You do the same exercise. A 5% position is the equivalent of $25 billion. To be below the threshold of 10% ownership, the market cap of a company should be minimum $250 billion. To have a 5% position in his portfolio, they need to find companies with a market cap of $250 billion. You have only 62 opportunities in the entire world that fit this criteria. Now, let the hunt begin. Out of these 62 companies, how many do you like? How many do you understand? How many of them are inside your circle of competence? How many of them are run by a great management team? How many of them are changing the world, improving the world with a win-win-win situation? Out of 62 companies, it's very hard to find something that you like. Okay? So out of all of them, maybe Warren Buffett likes, 10. Let's say this for the example. And out of 10, how many are fairly valued? I started this video by saying that you should not compare yourself to Warren Buffett. Now the US market is expensive. Even out of 62 companies, what is cheap? Good way, a good valuation multiple we can use is the PE ratio. If you look at history, Warren Buffett has never overpaid. So let's say you want to invest in companies with a PE ratio between 0 and 15. Let's see, you go from 62 results to 9 results. If Warren Buffett wants to create a 5% position for his portfolio, he has the choice between 9 positions. Out of 9 companies, which one do you like, which one do you understand, etc., etc., etc. The investable universe of Berkshire Hathaway is way different than yours. So I would say it's a huge mistake to compare yourself to Warren Buffett. The game is different. We are retail investors. We don't have $500 billion in AUM. We can look for opportunities anywhere in the world. We can go into micro caps, small caps, mid caps, international investments. We can go into Japan, Korea, China, Latin America, Europe, small countries in Europe. We can find golden opportunities anywhere. So I see that some people say maybe the best investor knows something. Well, he told us publicly, size is a big anchor to their performance. They want to find opportunities, but literally they cannot find opportunities because they have become too big. So please don't compare yourself to Warren Buffett. Similarly, when he buys something, don't rush into buying, don't clone him, do the due diligence first, see if you really like and understand the investment. Similarly, when Warren Buffett sells something, don't blindly sell the stock because the opportunity sets are vastly different. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.